think we're live, yeah. So hello and welcome to another stream with me, Christian Rauchenwald, on this, for a change again, beautiful Friday here in Ukraine. As always, we're gonna use our time, actually I have the wrong scene activated, push a button. Use our time to look at GameStop using Elliott wave theory and trying to predict where we are going from here. And yeah, so GameStop had their shareholder meeting, during which basically a few things were decided. They appointed a new CEO and some other leadership role, CM something or CFO or CMO or something like that. Doesn't really matter. And also they announced that apparently according to the number of votes, and that's something that I've saw repeatedly on Twitter and so on, according to the number of votes, so shares that voted for what was on the table or on the agenda for that shareholder meeting, there are actually more votes than shares floating around. Now, people seem to understand that that means that the stock is heavily shorted. However, if we have, let's say we have a stock with 100 shares and I short one single share, which means I borrow it from you and sell it to somebody else, then there is 101 shares. Now, if there would be a vote and every share would technically vote, it would also be 101 votes for 100 shares, and it would also be more votes than shares. However, doesn't indicate how many more. Also, we have to, I think there are multiple things here to consider. In general, it's a good sign for us that are betting on a short squeeze, that there are more votes than shares. However, we have to consider, first of all, unlike in usual situations, when it comes to GameStop, a lot of people put in a lot of effort and time to get people to vote. In the usual situation, many people would just forget or maybe wouldn't pressure their brokers to make it possible. So if we think about all the shares available for eToro or at eToro, eToro hasn't offered the option to vote for anything in the past, and only because they kept being asked or the users insisted that they want to vote, they tried to find a way and found a way. So yeah, so even with a regular stock that's not as heavily shorted as GameStop apparently is, or in our opinion is, we would still have, if we motivate enough of the shareholders to vote, there would still be more votes than shares, even if it's only like a fraction of the short interest, yeah. And I think that's one important thing. Like, well, it's obviously the shareholder meeting was good news in my opinion, and yeah, like overall positive. The earnings were positive and beat expectations, and yeah, so a lot of positive news. However, still followed by sell-off, which we also had after the last earnings call a couple, 2 months ago, 3 months ago, a quarter ago, yeah, quarterly results, haha, so 3 months. And yeah, anyway, I'm gonna fire up Motive Wave here on my end, and then we're gonna look at GameStop and what happened. I just briefly followed the charts through the last couple of days, and also thanks to, also need Discord by the way, thanks to one of our Discord community members who's also sometimes here in the stream. I was a little bit more up to date with the Elliott wave labeling. Thankfully, I'm not the only one who does that. And yeah, so in Discord his name is Phi, so P-H-I. On YouTube it's a little bit different. I also see that my YouTube chat now disconnected and it's gonna reconnect, but the stream is still up. Gonna verify that. Yes, stream seems to be up, just chat is disconnected. Okay, so whatever you're writing, okay, it says unable to connect to chat. Great, gotta love YouTube. Yeah, please please try again later. Yeah, but how can I reconnect? Dumb. If I refresh the page, would it end the stream? That's the question that I have, since that's the control center for the stream. Let's try what happens if I open up the stream again. And connecting Motive Wave, two-factor authentication. Almost there, so. Yes, it's me, Mario. And yeah, I'm live, yeah, I know that, thank you, email. Live streaming isn't available right now. Okay, that's getting better and better. But I'm live. So, oh no, I'm signed out now, even better, sign in. Are you shitting me? Go live. Not sure if you guys can still hear and see me, so gonna check YouTube. Am I online still on my own channel, or can I close that stupid window somehow? Back right now. Streaming software. Yeah. Switch the channel. There we go. My channel. Cool, it says I'm live now, so apparently have to watch ads. I can see the chat now here on my other screen. Now, just for argument's sake, can somebody write something in the chat? So if you're still seeing me live, so that I know it's not just, wave, let's test. Okay, yeah, so I'm still live, but somehow within YouTube, I have no way to manage my own stream, which is great. Which means technically I also have no way to close it. Can I find it in, no, I don't find it here. Yeah, webcam doesn't make sense. Oh. That's just expanding the menu. Yeah, I gotta love it when time is wasted on issues like that. Let's check if I go from here to my own live stream, do I have a method to go to manage it?
Hello and welcome on my YouTube channel. My name is Christian Rauchenwald, and while this channel...
All I want is to be able to read the chat on my second screen. Dear YouTube, don't make it that hard. Yeah, my channel. And okay, here it also says that I'm live. Great thing. And now if I go from here to edit video, it likely takes me to the edit video section and not to the, yeah, I go to the Creator Studio. So great. God, like, seriously. Serious now. Seriously. Okay, so we're gonna work with that. So at least I can see the chat. I'm just gonna reduce the quality of this one to the minimum. Can see the chat here. I also muted the audio, so hopefully there. Oh, sorry, you likely heard me twice now, or maybe you didn't. I don't know. But yeah, so I can see the chat, so that's already a start. So which means I can close this and I can push that button here. And you guys can also see my screen. I'm gonna move the mouse, so, and yeah, so while I was dealing with technical issues, the exchange opened and basically we gapped up a little, a couple of percent. So if we look into Motive Wave, we have there the labeling, which I, by the way, adopted based on FI's labeling here. It's a little different from what we had, and the difference is basically that originally in our last stream, I assumed that 4 might be here, 5 might be here, and that mostly based on Kennedy channeling technique, because when we have this 3-4, then that 0.5 comes very close to our destination channel's top line, which would fit. But looking at how it developed, the pattern like this actually makes more sense, which means we're now in wave 2. And while already at the 240 line, it would have been a sufficient enough drop, we saw basically that we dropped further, touched the 50% line, and technically we could still go to the 61.8% line of this retracement, and then from there basically continue in our wave 3. Yeah, so if we compared it with what we have here, yeah, like so in FI's labeling from, when was that, 9th, and today's the 11th, so 2 days ago, he figured we might touch 200 roughly, yeah, and that pretty much adds up with the same area here, so yeah, so also 200 roughly. And yeah, but we don't have to, so it's like the retracement we have in this area would already be sufficient. However, either way, either we go down, which then in this case, if we're now on hourly, so here's today, and yeah, then there we have basically Monday. So either for the rest of the day we see it drop, or we see it basically already finish and turn around from here, either way. Yeah. As you also may notice, this blue small arrow indicates that I bought another few shares, not much. In Interactive Broker, I now hold an astonishing amount or number of 15 shares, and total complete with eToro and everything else, I now hold exactly 100 shares and a few fractionals, yeah, or a few fractions, so which seemed like the nicer number, like, yeah, so which means I averaged up. I bought at, in this candle, but higher, like around 230, yeah, so yesterday or the day before, yesterday, yeah, of course. And now if we look closer, yeah, so let's compare that real quick. So here ABC, and here also we have the pattern that threw me or us, depending on how we look at it, off, because I assumed that this would be 4-5 because we have a new high here. But if we look at this as a flat corrective pattern where wave A goes down and wave B creates a new high, yeah, then it obviously makes more sense and works out better. So again, that's the burden of, or not the burden, but the problem or the challenge with Elliott wave theory, to at any time you likely are able to apply 2 or more patterns that might follow the rules, and then it's up to check, or up to you as the analyst to figure out which of those is most likely. Yeah? And in this case, the assumption, although I also have to say with my labeling where we had 0.5 labeled here, yeah, if we zoom out a little bit again, so if 0.5 was here, God, sometimes like I really have to figure this out. Stop switching between exchanges, you stupid software. Yeah? And definitely will need to open a ticket for that. But with 0.5 here, and that's what we had in the last stream where I also mentioned I actually would expect it to fall to 220, and there the 61.8 retracement would have been 182. Yeah, obviously the distance here is shorter, which means the absolute price for 61% retracement is also a little lower. So not much changed unless somebody would want to trade the swings and would have sold here, yeah, in the hopes to buy lower. They still would have had that chance. In this case, it just changed a little bit to this scenario, so where from here we have our drop, yeah. And yeah, so, and thanks so much for streaming today. Do you see large movement before close? It's hard to say. I suck at corrective pattern, we all know that, so could be that it's going to be a boring day today. Let's check, by the way, since it's a Friday again. So Max Payne, which used to be a great computer game and a horrible movie, would be 260. So for that we would have to cover quite some ground. I'm not sure if that will happen. Like, I mean, it can easily happen with GameStop. We know how fast some of the movements are and how far they can take us. But I am not sure if it will happen today. Like for that, if we consider that this corrective pattern here is supposed to be like a very ugly zigzag pattern. So yeah, like everything doesn't align anymore. So hotkeys. So okay, it doesn't auto snap. So as much as I love Motive Wave, there are a few little details that they just could have done better, yeah. But yeah, so actually gonna get rid of that for now. And I can show it like this or not, so wave 2 to wave 1, yep. So, and if that were a zigzag, then it obviously would be quite an ugly corrective pattern from here to here, and then down to wherever our point 2 will be, which technically or theoretically, as we see, 50% retracement could already be here. And I think we'll have to wait and see how the first, I don't know, half hour, 2 hours, if we see some downward pressure, or if we see upward pressure. Technically, that, by the way, also has more of the criteria of a flat correction, in terms of, in a zigzag, usually wave A is a strong movement, and in a flat correction, and if we check here, in a flat correction, often wave C is a strong movement, and here, for example, this gap down here is definitely a strong movement. But yeah, so I honestly, on first glance, like if we were to look closer, I'm not sure if I'm able to confirm that pattern, to be honest, because we would need to be able to, if that's a zigzag, then this first part here, wave A, would need to be an impulse or a leading diagonal, so, and that would then need to be, is this point here higher? High 340, high, so they're both at 340, so technically our point 1 could also be here, and then this would need to be a 1, 2, 3, 4, 5, so which we are able to roughly say, so from the start, 1, 2, 3, 4, and then 5, where 3 is not the shortest wave, but 5 would be the strongest. This here would need to be any corrective pattern, which could be a series of zigzags, so it doesn't have to be one simple ABC, but could be a double or a triple or anything else, and then down here we would need to have another impulse, which is going to be challenging to label, in my opinion, because we lack strong counter trend movement, where if we are, if zoom in, if we look here, we have like our, that Kindle goes up. So if we look here, we would have 1, 2, and then it might actually not check out. Let's check this. 1, 2, and if this were to be wave, that would be then 3, 4, for example. It actually checks out, so with an extended fifth wave. So, but here, like for this whole part here, I have a problem finding a 1, 2. So it doesn't look like 1, 2 here. Then obviously we have a stronger drop. And then also like the only noticeable counter trend move here, since the trend in this wave C is downwards, would be that part up here, which seems like an A, B, C zigzag. But either this is wave 1, 2, or somehow there's already wave 1, 2 hiding in here, making this wave 3, 4, and here wave 5. The difference obviously is if this is 1, 2, then we would basically currently be in our wave 3 downwards. That could be wave 4, and we would still have a drop to come in wave 5. If, however, 1, 2 is already hiding somewhere in here, where I'm just unable to label it, as said, I suck at corrective patterns, then that would already potentially be 0.5 and the end of the corrective pattern, and from there we would then supposedly go up. However, we should still keep in mind, if we again zoom out, that even if we have a zigzag here, so, or like that, even if we have a zigzag here or whatever other corrective pattern, that it could always turn into a double free or triple free corrective pattern, where then obviously we would not see lower lows, so however that plays out, so even if we go down here to finish this corrective pattern, but then just we would recover and then in another corrective pattern move sideways a little bit before we actually go up, blah, blah, blah. Just bought today for some more at 220, couldn't get on yesterday when it was at 211, busy with work. Yeah, it's like similar for me. Like yesterday I entirely missed the drop. I just noticed, okay, it's dipping, but I didn't follow exactly how far, because who cares? It's just a temporary discount. And I actually didn't plan to buy more shares. I just then thought about it, like, okay, like 100 would actually be a nicer number, so that before taxes, of course, but that once we reach $1,000, it actually equals a nice 100,000 and before taxes, and not some weird 90,000 something. And then I just jump on. I saw that we are around the 38.2 retracement, and I figure, okay, that's the point. I didn't have the time, and I didn't want to spend the time to look into how likely it is that that's already the bottom, or create pending orders at different levels. So just bought. I said here, so and in the end, like honestly, it doesn't matter. Like if or when we go to $1,000 per share or more, then what difference does it make if you, like seriously, like if you think on the bigger scale, like what difference does it make if you bought at 230 or at 220? But yeah, I also consider it's a discount. Like the real question, however, is like, how can there be such a dip, you know? Like, I mean, I always like to, in all of the streams so far where maybe other people are like, everything is manipulated and that number is fake and that number is fake and so on, I always like to point out that while we might have like, how do you say that? We might have evidence that points us or supports the idea that, for example, the short interest reported on FINRA is fake, yeah? The official short interest still is the number reported there. So that's the official one, yeah? And unless we have like real proof that it is different, I don't wanna try to justify, for example, my labeling that points towards a certain moon in quotes by saying, well, yeah, because that number cannot be trusted and that number cannot be trusted and so on. Or especially like what we had previously when if we zoom out a little more, when we struggled with this endless corrective pattern here, or actually from here we started on struggling, yeah. Then we also, in the chat here and there, someone asked, okay, but couldn't it be that the rule violation is okay because of the manipulation going on here? And yeah, like I don't want to do those things because it means we try to, there's a proverb for that or not, yeah, but it means that we are trying to basically adjust the rules to fit our thesis or our projection instead of adhering or following the rules to get the right projection, yeah. And however, still, one has to wonder, the last earnings call brought us to 116, although at least in my opinion, the numbers were also positive compared to what GameStop suffered before Ryan Cohen got on board, yeah. And this week's shareholder meeting and the numbers released also are more than positive, beat expectations and so on, and yet there is this huge drop, yeah. So while obviously we don't have any solid proof, so not just circumstantial evidence that points towards something, but literal 100% proof that there is whatever, like naked short selling going on. Even, for example, some guy that does a lot of DD shared on Twitter a screenshot of ETFs getting shorted, and obviously it's ETFs that contain GameStop. But while that's again circumstantial evidence that supports the idea that the ETFs were used to create this, yeah, or create the beginning of it, and then some short-sighted people panic sold with whatever loss they had because they bought here, yeah. It still is not 100% proof. It's just like another piece of circumstantial evidence. However, I'm also aware that considering the amount of circumstantial evidence that we have that points towards wrong short interest that is reported and all the other stuff, manipulation in general, that it's obviously the very likely scenario that all of that is true, but still, yeah. So anyway, yeah. Looking at the movement, it actually would indicate, again, I mean, there's still a possibility that either this year is wave 2, which would make this year wave 3, although it would be too short now. Possibility that this year turns into 1, 2, however, the whole pattern would be way too big in comparison or relation to the corrective pattern as a total. Technically, it could be that this is 1, 2, 3, now we see wave 4 and then wave 5 of only wave A of the correction, but the same thing would apply in relation to the other waves that would be way too big. So potentially it leaves us with 1, 2, 3, 4, although there we would already have a problem. It would then need to be an ending diagonal because we are already in the area of that high or of that low here. So it cannot be an impulse down here anymore, but would need to be an ending diagonal, and potentially with wave 5 still to come. And yeah, but still in terms of the shape of the wave down here, it just like nothing looks really nice. Yeah, it just doesn't fit. And yeah, just have to wait and see. But right now with that movement, I would say like we probably already reached the bottom of the correction and are now up. So that's our 0.2 and are now basically in the beginning of our wave 3. And that wave 3 is, however, if we scale that properly again and zoom out, I'm gonna use hotkeys for zooming now. so that it's like not so chaotic. Yeah, in our labeling, this is basically now wave 3 of wave 5 of the bigger wave 3. However, I think in Phi's labeling, this would actually be wave 3 of a wave 3 of a wave 3. So an even stronger move. In both cases, no matter who of us has the right labeling here for the bigger scale, in both cases it points towards strong upwards movement. And yeah, what I forgot today is, by the way, hi Zara, hi Gerd, hi Shao Ziroko, no idea, hi Predator 8, hi, yeah, Looted 1, no, yeah, something, Stotter, and hi Gerd, already had Gerd, yeah, well, twice, yeah. And Shao Ziroko says the drop could have been GameStop doing a bit of the at the market offering that they announced. True, that's also true, but as far as I saw it, they mentioned that they said, I mean, you anyway say a bit of the at the market offering, that they basically will do that from time to time, and I actually wouldn't expect them to do that right after the earnings call. So like to basically, especially when they probably remember the drop that happened after the last earnings call. So it's like the prime the prime target, like if we believe the circumstantial evidence that we have, the earnings call is the best target for shorts to spin the narrative, because that gives them the chance to write articles like GameStop shares plummet despite positive earnings, yeah, and then write some garbage about that, whatever, like all the transition plans or whatever Ryan Cohen has planned are actually like just fairy tales that will not work out or whatnot, yeah. So like, so I don't know. So GameStop selling additional shares as announced right after the earnings call just doesn't seem like the smart move to do when you can already expect that that's the prime attack point where they anyway will try to short. So they are throwing in additional supply to make the drop bigger. I don't know, but it's possible. It's possible that GameStop sold shares to fill their bank account or the company's bank account, and that they basically helped create that dip. Yeah. Blah, blah, blah. Where's your 3 predicted to now with 2 potentially being, let's check. George Blanchard, welcome to have you here. If I remember it correctly, but I'm very bad with such things, you are the one hiding behind the username Phi, yeah, like, or I may be mistaken. God, sometimes okay, so that's hiding this. Obviously it picks my 0.3 now here, so hiding that, and let's do this. Also, subtle or gentle reminder here that that's another area where I'm still sucking at, is using the Fibonacci retracements to predict the price movements. As you might know, if you follow me for some time, I used to use wave basis for the labeling, which is not as detailed as motive wave is when it comes to Elliott wave theory, but in many cases, automatic or always when you hover a wave, automatically prints the predicted price area for you. However, it will not always be the right one in quotes, yeah, but very often it still was the right one. Anyway, but I would say somewhere in that area here. So we know that the 38.2 and 61.8 retracements are important areas, and the same goes the other way. So 481, which actually would be interesting because that's very close to the last all-time high that we had, of course, where then buying restrictions and whatnot happened. Yeah, so if we look here, 481, so we see that that would be precisely that point, which would kind of, yeah, like I'm not saying that it makes sense, but yeah, wouldn't be surprised if here in that area, first of all, I expect that with all the months that the shorts had, that they also made some, I mean, they overall made losses, we know that, but maybe some of them were smart enough, just maybe, to also short from when they already, again, conspiracy theories in quotes, when they helped to get the buying restrictions in place, maybe they were smart enough to short from here down and take some profits, so that while in January it was enough for us to reach, I don't know, $100 or $150 or whatever exactly price level then triggered the squeeze. But I expect that this time we actually need to see a price above $500 or 500 something to trigger the squeeze, because no matter how stupid they are, I think that they're still, or we're still able, especially when they, if we assume that they are creating artificial dips, then I'd also assume that they are somehow able to make some profit from it. Yeah, like I'm not saying a lot of profit, but some. And yeah, so I'm a bit concerned about the double top we created around 350. We'll need some big news to overcome it, I guess. 350. You mean here, this pattern? So from that 350 and that 350. I don't know, I think that will actually be, if we consider, so if our labeling is right, we are now in a third wave, not always, but very often is the strongest movement, which would actually fit perfectly, that somewhere when we get close to that, or even before that, we'll have a strong movement that just shoots us through, yeah? And yeah, like we'll just have to, as so often, wait and see. But yeah, okay, I'm gonna get rid of that one thing here. But yeah, so based on Fibonacci extensions and my limited skill set with manually predicting the price areas, yeah, like not using wave basis for it, I would actually say that would be, as said, the wave 3. Although also possible that we shoot through that, yeah, and then we are at the $600 mark. That would then be the next thing that I would consider. However, we can also, like, why not go it the other way? I'm not sure if I have enough data on the chart, but if we, for example, take here this wave 1, our wave 3 actually is around the 200% mark, so a little bit above it, yeah. So didn't fully reach the 238% mark, yeah. Although, if we, let's get rid of that, but the flat correction actually created that new high. The other option would be, but would that check out if like our wave 3 would technically be here and this would just be some kind of zigzag movement, although a weird one, yeah. But then how would this be? 1, 2, 3, 4, 5. That actually would still check out, yeah. We'll have to discuss that in the Discord chat then later. Because, I don't know, like Fibonacci just seems to always or very often prefer those 38.2, 61.8 numbers. And it just seems like too nice how close we get here before we actually drop again. And yeah, but if we do, we have another, we removed all the old labeling, or didn't remove it, but it just disappeared over time with playing around with the setup. I remember that we had a 1, 2, 3, 4, 5 in here somehow, yeah, like so. Let's zoom out a little bit. I think we did that on hourly, or maybe not. Up and zoom in and scroll back and scale that properly. Yeah, so like from here, if I'm not mistaken, it was like either like this, 1, 2, 3, 4, and 5. Although here we had obviously an extended wave, but just for the sake of it, if we go from here, we actually have the 686 percentile, yeah, so interesting. And yeah, like, don't have enough patterns on the chart to basically look at enough other impulses to see which percent or which percentile it is in most cases, or in which percentile area we are jumping around. So I'm going to stick with the 480 as a target for wave number 3 for now. But as said, that's one thing I'm not great at. Yeah. Also here now, if we assume that this is our wave C already finished because of the strong movement that started here, but if we then look here, that looks more like an A. Yeah, no, actually it could also be a 1, 2, 3, now we have 4 and 5, so building a very small wave 1, unless we fall below 221, then it would need to be a 1, 2, 3, 4, 5 leading diagonal, or it's just basically, as said, could also be 1, 2, 3, 4, and we still have wave 5 to come down here. So the magic price point to watch is probably roughly in this area, so around 217, 215. If we go below that, so the first point is already when we cross below this point, because then this cannot be an impulse anymore, but only leading diagonal. And if we then were to cross technically below that point, so at 211, that would be the definite confirmation that this here is just a corrective pattern that will take us further down. And yeah, so, but I guess like if we zoom out a little, yeah, things are still visible. So yeah, I can also move my camera, I guess, in the bottom corner now. Yeah, sorry if it covered something during me talking. And yeah, so not sure how long I can stream today. So I mean, since we're just watching the candles grow right now, actually while we are watching the candles grow, we're gonna do what we usually do. We're gonna look quickly at Tesla to see if we're finally going to where I think the stock will go. And we're again slowly creeping there. Now my labeling there, is it gone or is, oh, there it's in the primary analysis, yeah. Okay, so there as we can see are again zooming out daily. So the labeling says A, B, C and C at 468, although the question is the when. Now, if we move closer, hourly might already be too close, but let's try, yeah. We can roughly see, I'm gonna have to check how that was. So if this is wave 3, this has to subdivide into 1, 2, 3, 4, nope. That was 1, 2, so if we check from here, we can again see 50%, almost 61.8, so this here was either that point or that point, doesn't really make a huge difference, 1, 2. Then we have a base channel that goes down here, we have a breakout here that says 3, 4, and that's wave 5. So building this wave 3. Now this could already be wave 4. However, wave 4 could also still be going sideways, again as a double 3, triple 3 corrective pattern or something. And then we would finally get our wave 5 that takes us down. So I think in Tesla, well, there's potentially still sideways movement. The result will eventually be that we see the 460 mark. Yeah, like I think that thing played out quite nicely according to labeling. The only part where it starts to, or where it started to move against my assessment is, first of all, oh, that's actually still okay. So initially we almost touched and bounced a little bit from the base channel, which would have been okay for in terms of Kennedy channeling technique. Then we entered it and we bounced almost from the median. So we kind of like zigzagged around it there, or not zigzagged, but moved up and down. And then eventually we touched the border of the bigger base channel, or the bigger channel that we have here, which is not from this 1, 2, 3, 4, 5, but from this bigger 3, 4, 5 here. Oh no, that one is from the bigger ABC somehow, yeah. Like anyway, so we touched that and bounced off from there, which would have been sufficient. But now if we look closely, now we precisely touch the top of the base channel of this 1, 2, 3, 4, 5, which would be the perfect point for the turnaround to now take us down to wave 5. And in this case, technically our wave 4 point would probably be this one here, so our orthodox wave 4 point, and our destination channel will change a little bit because now it would look like this. And if we then again move out a little bit, let's sort of zoom. It just means that we will hit our goal a little bit later. So in a perfect scenario, we would hit it on the 13th of June. If we hit precisely that level and so on, and follow precisely the the patterns. Yeah, so going to be curious to see if we will go down from here, if we will see a breakout or more sideways movement that takes us here. But in terms of Elliott or Kennedy channeling technique, it actually would suit perfectly that we bounce here. Like, I mean, it would also have been okay bouncing here and bouncing here, but that's even, yeah, like the third option, the bottom, or in that case, the top of the base channel. And that's now our destination channel that points our destination is here, or would be the median. So the median would also be acceptable as a destination. And in which case we would see at least the 550 mark again, or it simply means we'll touch that line later. Yeah, but nice to see that one of the labelings that we have moves the way I thought it would. Bitcoin moved not the way I thought it would. It went like diving again at some point. Or it's now moving sideways. Okay, trading between 30,000 and 40,000. And let's look at daily here. Up. ABC, that actually checks out, and then, yeah, I don't know how to label that, honestly, like, unless this is not yet wave C, although we see that I labeled it on a lower time frame as well, 1, 2, 3, 4, 5. So if that would turn into a double or triple free corrective pattern, we would need to have a zigzag in here. So hard to say. Unless this is wave 3, this whatever here is then wave 4, or still wave 4 in progress, and wave 5 is still to come, which then would point lower. In any case, for me personally, like I bought a little bit, and I think it's like an okay investment, because even if we see first another dip, so even if that labeling is wrong in terms of we haven't finished the correction yet, and that is just like 1, 2, 3, 4, 5, then it just means that that I get a chance to average down before we finally have wave number 5, which at least will recover 70% of wave number 4. So if it's a truncated fifth wave, it would still at least recover 70% of the drop. And yeah, like if it recovers from yeah, like, so let's say we would go even further. So if it would go to, I don't know, 25,000 or so, and we recover 70% of that, then so let's say 25,000 would be here. So we would still pretty much make 100% return or so, even if it's a truncated fifth wave that we would expect here as wave 5. Yeah, so I still think good. Maybe my entry was a little bit too soon, although my positions are in profit. So not that bad, but even if it was too soon and will again turn around, then it's just a matter of who or enough patience. Yeah. Now with that, we can go back to GameStop. So we looked at my 2 favorite alternative things to look at, and there we need to go to the alternate labeling. I also have to, yeah, and it again, like 2 things I have to figure out. Like, and I'm actually gonna, yeah, I don't have my pen here, so just going to take notes here on my reminder so that I open tickets. First of all, to get that to stop switching to the other exchange, because the smart exchange comes from Interactive Broker, which is integrated so I can manage the position, but the data comes from bar chart, which is different because it's directly NYSE data. And yeah, so daily 5. And the second one, so first of all, switching exchanges. And the second issue is, or was, now I already forgot, yeah, cannot be that big an issue. So first of all, the switching, how can I copy the alternate labeling and move it into the primary analysis so that we also have that there, so without actually labeling everything there again. Move analysis, yeah, so the notes taken, yeah. Now with that as said, we are back to our waiting game here. Now the dip here wasn't that bad, although it reached, what's the low here? 221.50, and the high here is 221.63. So technically it reached into the area of this thing here. So if this were 1, 2, 3, 4, 5, it would need to be a leading diagonal, yeah. And yeah, on the other hand, and it would mean 5 is still in progress. And on the other hand, if we look here, it's 50% retracement. Yeah, so I'll have to wait and see, but it currently points towards, it's more likely that that's the bottom. In my opinion, it's more likely that that's the bottom, and from here we're now going back up again. You know, it's always funny when we have like bigger movements in GameStop and I look with my 100 shares and I see like within a day I'm suddenly worth like, I don't know, a couple thousand euros or dollars more, or suddenly worth a couple thousand euros or dollars less. And then I just imagine how it must be for people like Deep Fucking Value with like hundreds of thousands of shares, yeah. Like just honestly, like still holding. Like I really respect, biggest respect, because he already would have life-changing profits if he would just say, okay, that's it for me, thank you. He doesn't have to like, I mean, if you have like 20, 30, 40 million, that's already more than enough to have like a more than average life and never work again. So huge respects. Like I mean, for me, the swings are fine. I also learned to handle that already a long time ago. It's actually when I used to make a living playing Pot Limit Omaha, so like playing poker, live poker. And when I started playing poker, I really sucked at it, and I was very bad. I didn't understand the maths behind it and so on. And although I was financially not broke, I wouldn't say doing okay, but not broke, when I was playing, it was like $20 cash games or so. So not the big blind is $20, but your entire 100 big blind. So it's like what, 10 cent or 20 cent or whatever per chip or per big blind, yeah. And I remember when I started playing, and then somebody, I don't know, I had maybe the second nut, so the second best hand that you can have right now, and somebody, whatever, like went all in for $25 more or something, and me then thinking about it, oh my god, should I not, and so on. And then over time, so I started to learn the mathematics behind poker and so on, and over time I got better until eventually I consistently played on at least PLO 200 and 500 cash games, so where one stack is $200 or $500, which means basically within a few seconds or within one hand, you very often are either $1,000-$2,000 richer or $1,000-$2,000 poorer. And so, yeah, like that's how I learned to deal with financial swings, and also eventually learned risk management. Now, Randomize says, how is your chart showing 236? On my chart, it's 228. Well, obviously my chart is better. What, the stream is 15 minutes delayed? Are you serious? Huh, what? It cannot be 15 minutes delayed when my chart is showing the... How is your chart showing 236 on my chart? If your chart is showing probably your data, where are you checking your data? Like maybe your data stream is 15 minutes delayed, or... Because 15 minutes ago, so that would be basically 3 candles back, we would be at 230. And so if you already see the 236, then it means you see the updated version in the stream, and somehow what you're looking at might be delayed, yeah? If we check what's the price on eToro right now for GameStop, $232, and here now, right now, also 236.37. Interesting. Well, definitely my chart is better. So in this case, TradingView 232. No, like I'm missing a few candles here apparently, so. how is my data delayed now? Like, why am I paying money for data feeds when then my data suddenly seems to be delayed? Because it seems like I'm not seeing the dip here right now, yeah? So that says 2:15. And that says 5:15, which is time zones are different, but it's still like, okay, like let's do this like dumb people would do that. So we had the market open here, and since then on the 5-minute chart, which obviously doesn't check out, I have 1, 2, 3, 4, 5, 6, 7, 8 candles, when there should indeed be 1, 2, 3, 4, 5, 6, 7, 8. So I'm missing 2 candles here. Yeah, am I getting right? It's called API latency. Well, yeah, but I shouldn't have a latency, and if there would be a latency, it should be like in the hundreds of, or like in the milliseconds area. That's why I'm paying for a data feed. Otherwise, I could just set up the free Google data feed in the app. And also, one has then to consider that we also have the last time counter that you barely see below the camera, which indicates when the last update was received from the API, which actually also should show like the timestamp of that update. So, not to mention that while having the data delayed, yeah. So for example, here 1 update per second. Okay, here actually it's still real-time data, but while having the data delayed, so the candles delayed, probably would make sense in some cases, or not make sense, but would be okay. But it wouldn't make sense in combination with like the order size. Like, who cares what the last position 15 minutes ago was? Yeah. So, which means now I can open the TradingView chart on the other side and then precisely predict the movement 15 minutes in advance, and most people would be blown away and not notice how it's possible. Yeah, so then I'm gonna pitch my trading course for $4,997, where I teach you exactly how it works. And voila, don't need GameStop anymore, gonna make $1 million selling that course or more. Yeah, I wish I had the time, honestly, to figure this out. I don't want to try to figure it out on stream. I mean, I can try to disconnect and reconnect. Doesn't get better. Yeah, like, I mean, okay, let's try another thing, clear local data. Also like, so 234, 229, so I'm still up here, yeah, so like somewhere, no, here, technically in this candle I should be. That doesn't check out at all right now, like if we compare it with TradingView. Yeah, but that's the one we have here, and if we pick our there we are also behind, or not here, it's 231. Yeah, it's pretty much the same price, just that this here doesn't update, as we can see, as frequently. Although here you can see that the last time indicates that it's 15 minutes delayed, yeah? Because I canceled the real-time subscription from Interactive Broker, and therefore there we get less data. And as you can see, it indicates it's 15 minutes delayed, whereas the bar chart data indicates that it's actually the real-time data, but somehow isn't. And also when we look at this here, although that could be based on the candle style that we picked here, so yep, so no, regular candles, regular candlesticks, candle, those should be the ones, yeah. 2 down, that thing, 2 down. That cannot even turn out like that. I mean, okay, that's also a scaling difference or a proportions difference because obviously the proportions of my chart are different. Yeah, but yeah, so we are roughly at this candle here. Great, gotta love it. Why am I paying for the services? So we'll have to deal with trading views so that we have updated chart data, yeah. But anyway, so as I was saying, or as I wanted to say, I'm not sure how long I will be able to stream today because I still have a ton of things to do. I actually was able to catch up on a lot of the urgent stuff, and finally I'm almost at a point again where like there is nothing critical on my to-do list. And yeah, but still, I used to develop a caging solution for German e-commerce shopping system, and yeah, like that's something that came up in between that I now, based on previous obligations, should provide an update for, which takes up time. Also, I mentioned in our last stream that we finally hired our content and community manager. So he started on the 1st of June, so Tuesday last week. And it hasn't been a great experience, and it was even topped this week when he then suddenly just texted he doesn't feel that he's a nice fit and basically quit. Before that, although before he made that message, the last 2 days he simply ignored more or less like all the work orders or tasks that he was supposed to do. And yeah, which also now means again spending time looking for a potential replacement. We also looked for a new project manager and luckily enough found one that hopefully starts on Monday. So he already agreed, but we already know from experience that sometimes people say, yay, great, and then last minute say, oh, I'm sorry, I won't come. And yeah, so still a lot to do. And as always, 2 little hours in the day. So not sure how long we will be able to stream. Or I will be able to stream. I would actually like to see how, like at least in which direction we go. Potentially, I said this could be 1, 2, 3, 4, 5, which would make this, so which was make this a very small wave 1, and this would be then likely an A, B, C. So yeah, we like the candle still, but so that would be the 3rd candle, and just roughly from here, so which would point towards 225, and we're already at 225 now, and again roughly point towards 225, so for wave 2, and from here we go further up. Now it's like I just don't like the labeling here because we don't have the tools, so because this would then be 1, 2, and that would be a leading diagonal, 3, 4, 5, and as said, then this here would potentially look like A, B, and C in progress. So for that we can actually also here, if we draw a line that you cannot see because it's obviously not there, no, because it's black. Oh yeah, so it points lower, so it points towards, let's bring this back here, or let's just create a new one. Yeah, now I'm gonna switch to the close your eyes. I'm gonna switch to regular theme, like I hate dark theme. And yeah, so basically would point towards, if it's a perfect zigzag, towards 220, which also would roughly be the area of wave 4 of the previous wave of a lower degree. Now, if we add to that Fibonacci retracement, I think that's Fibonacci retracement, or yep. Then we see also that the 38, or that wave, snap, that wave 4 here would also be the 38.2, although they are labeled vice versa, so it would be the 61.8 retracement down here. So the 222 line actually seems like a reasonable point to expect right now to finish off the small wave 2 and then go up from here. So I said this could potentially be on a small scale A, B, followed by C, roughly 220, so that it's on this wave 4. And also the 61.8 retracement, and yep. And I also decided, so I used to have 3 different eToro accounts. So first of all, my Popular Investors account, where I'm managing the portfolio myself and have to do so within certain criteria, so certain risk scores, maximum drawdowns and so on, to potentially eventually also make that an income stream, so get paid for people copying my portfolio. Additionally, I had a copy portfolio, so where I basically just looked for other popular investors with, in my opinion, decent histories and copied them, which I figured would be a nice way to diversify further. And basically, yeah, like balance my risk and so on and whatnot. And then the third account is my high risk account, which is currently 100% GameStop. And yeah, and however, this week I took the time to look at those accounts. And while in my Popular Investors account, I managed to basically pretty much double the money. Yeah, so in a year, I think it's double, yeah, like if I remember it correctly, but let's say 50 to 100% like return. And in the same period of time, although it's like a small account, it started out with $1,500 and with some additional deposits over time and so on, and obviously the gain that we made, but now it's like at $3,700. So would need to look up exactly how much I deposited, but overall I think it's close to 100% return on that account. Whereas on my social trading, on the copy accounts where I'm copying other popular investors, it started out with roughly the same balance, and over the same period of, or it's actually a shorter period of time because it started 3 months later, but still during half a year or so, the overall return was 170 or 150 euro. Yeah, so decided to close that copy account and just once the money is withdrawn, deposit again into the main account to just manage it myself. First of all, less work because I don't have to look at other popular investors as well and try to figure out who to trust my money with or our money with. And second of all, also more money to work with, which means either I can open more positions or bigger positions, or I can stay more in cash, which automatically reduces the variance of my decisions. So yeah, that's also some news that happened. And yeah, I think that's pretty much it. Oh, last but not least, see, before I forget, actually I'm gonna spam you guys in the chat there. So there is, I mean, it's like from my main YouTube channel, so if you guys are not interested in stuff like that, then just ignore that, yeah. However, so there's a new crypto project. It's called High Dollars, and it's from the former CEO of Bitcoin.com, the former CMO of Crypto.com, which Crypto.com, as you know, likely is my favorite crypto. My favorite crypto exchange, wallet, and so on, yeah. And they actually had an ingenious idea. So if you follow some of the crypto projects like Pi Network and all that stuff that are currently, like, over the last 2 years coming more and more, it's always kind of like the same system. Like, okay, you have a mobile app, and in that mobile app you have to push a button once per day and maybe watch some ads. In return you get a cryptocurrency that in the future will be worth something or might be worth something. And High Dollars basically aims to become a knockoff or like a better version of Crypto.com. They want to create online financial services based on the blockchain with no fees in quotes compared to regular banking, so like more affordable and faster. But instead of having to use a native app, which they will also develop in the future, but what they do is they integrated it in Telegram right now. So they use a Telegram bot, and they're working on WhatsApp bot, Viber bot, and other chat application or messenger bots. So within that bot, you basically can manage your balance and in the future also just write things like send whatever, like $100 to John Everts, yeah, and if that's his username in High Dollars, or if you send to this number. And so basically, they have a great vision. They took a lot of the things that I love about Crypto.com. So first of all, staking rewards, membership perks, and so on. But the beauty about it is they just crossed 100,000 users. So they're really brand new in quotes, like a month or a month and a half. They have deep pockets, so they have they are funded well, so they are quite transparent. You don't have to install a separate app, but the real beauty about it is when you sign up now, then basically every day you can open the Telegram channel and you go into either you write hi in the chat and then enter, then you see the menu, or you press the menu icon next to the text input, and then you can say claim high dollars, and you get asked a question like, I don't know, like if you would be an animal, which one would you be, or stuff like that. And in return for that, you get high dollars for free. So for the first, or until they crossed 100,000 members per day, you got 25 high dollars per day, and now you get 10 high dollars per day. They are locked for 1 year, so the 10 high dollars that you get today can only then be used in a year from now. But still, it's like from all the crypto projects out there, it's the one in terms of the team behind it, the bank accounts behind it, the transparency, and the solution that they picked. I think one of the most promising ones, and it's really like, yeah, like in my opinion, great. So, but yeah, so John, by the way, hi. John says, refresh, close out, and open it back up. Okay, we'll try that as well. And also, Christian, thank you for the info you provide. You're the only one who stays focused on GME and streams it using Elliott waves. My girlfriend is sitting on the couch and I have you on live stream on my TV. And so your girlfriend is watching me now stream Elliott wave, or she's sitting on the couch doing nothing. Yeah. But yeah, anyway, thanks for tuning in. And I honestly, I wish I would have the time still, like we did initially, 5 days per week, just stream from market open till market close. Yeah. But yeah, like just like each and every one of us wants Ryan Cohen to focus on turning GameStop around and not doing some random stuff, I also have to focus on our business. And while we are blessed with unexpected growth already the entire year there, it also means unexpected challenges along the way. Yeah? Would you shout out Avery? The reaction would be great. So Avery is the name of your girlfriend, yeah? Yeah, then here, shout out to Avery. Don't hold John back and make sure that he YOLOs his money into GameStop. Just kidding, like do what you want with your money. But yeah, like maybe instead of, I don't know what you do on the couch, Avery, maybe pick a book like Rich Dad, Poor Dad, or Think and Grow Rich and so on. And also like consider expanding your financial horizons. You don't have to jump into trading, but yeah, like just, I don't know what you do on the couch, so maybe you're just sleeping or napping or playing with a cat. Anyway, I'm gonna try the idea, so to quit Motive Wave and fire it back up. Continue. So yeah, so in terms of promoting things, yeah, so as said, hi.com, and my username is obviously Rauchenwald, so my last name and the first letter of my first name. But definitely, I don't know, like in my opinion, it's like one of those cases, if the company or the project fails, then you lost a few seconds of your time every day opening up Telegram and yeah, like selecting an answer out of 4 in a question, like again, what animal would you be or something like that. And if the project succeeds in half a year, 5 years from now, you got a ton of, or a ton in quotes, like, but you got right now, if you claim the 10 high dollars every day, considering the current pre-sale price, so, or the price that people currently can pay to get high dollars, besides getting them for free, you basically can get $55 per month for free in high dollars. And again, either once it goes really live, it will not be worth as much, or the project fails along the way, or it will be worth more. But yeah, like personally, one of my favorite projects, like happy that I stumbled upon it. And to the moon, yeah. To the moon we go, yeah. And is this now, yeah, we're still behind, like I'm still like, I don't know, like, I mean, it's just honestly annoying, like, I mean, I'm here now somewhere, like, although my candle is still red, why is mine red? Yeah. It's like, Where do I have that? Yeah, or I think I cannot. If I show Simpsons in the stream, then it screws with the copyright. But maybe you guys know the episode where Homer Simpson builds a barbecue grill, and then you see this nice barbecue, but the camera then zooms out, and you see that he was just holding the prospect, and behind it was his mess of a grill, and he's like, "Though, why doesn't mine look like that?" Yeah, and I feel the same right now. Why does my damn chart not look like that? I pay for data, like. That's also one of the things, like I really, as much as I would like to get all of this sorted out, I only here and there, it's not about not having the time, it's about making time. So because like that's also, I don't think there is such a thing as not having time. It's not just always a question about priorities, but hopefully understandably for me, my priorities are growing our business further compared to figuring out why my charts are a little bit off, which I anyway didn't notice before today's stream. So, and what kind of retracement would we have till here? Probably 50%, yeah. So, which also would be okay. Dip, dip, dip. Yep, 50. Oh, snap. Yeah. It's actually it never ceases to amaze me how often the prices bounce at a 38, 50 or 61.8% retracement. I mean, it doesn't always happen, but it just surprises me that how often that's the case. Yeah, like zoom in. And again, we wait. Should have brought a book. How can I fix my data feeds? Need to look into that. Another, so that it's not totally silent, but another challenge in our life is now that we are hi Alibaba, great to have you here. So he says hi, everything's, or like, how are you doing? Tough day yesterday, buy and total and Russell 1000, yeah. For those of you that haven't noticed that, GameStop might get into the Russell 1000 unless something severe happens, and which obviously would also bring the attention of other investors to the stock, which obviously would also be bullish, yeah. Well, I don't consider, so I don't think yesterday was a tough day. First of all, I didn't have time to follow 100% of the time, but mostly because it was already to be expected that we will have our wave 2 movement, and based on Fibonacci retracements, it was already to be expected that we will be somewhere 240 to 190 in that range. So that's the beauty about Elliott wave. While there are many downsides, again, the flexibility, multiple patterns can apply. You have to figure out which one is actually the most probable, yeah. But the beauty still is, once you have identified the overall wave you are in, it doesn't really matter if I get this wrong, if this is 1, 2, or if actually one would be here, or one would already be here, or whatever. It doesn't really matter. If the overall pattern is labeled correctly, then you already know whenever you see a dip, or you already know to expect certain dips, because you know that they have to come in order to fulfill the 1, 2, 3, 4, 5 pattern that you're looking for. And then you can just relax, because you know it's just one of the steps along the way to even higher prices. So yeah, and thank you, Ali, I appreciate it very much. Yeah, and so as I was saying, yeah, so with like the benefit of finally reaching the point where our cash flow is big and stable enough that we can hire could hire the first employees, it also brings additional challenges. First of all, like for Irina and me, while we are usually working 7 days per week, so might not be 8 hours per day, and even during the week, sometimes there might be days where we only do the bare minimum, like reply to emails and so on, yeah. But still, it's 7 days per week. There is no day where we can just ignore support messages, or if there's some technical issue or something like that. However, when you then have employees, it's kind of like a benefit during the week, because technically once they are at a certain level, they can obviously during the week take care of some of those things. But it still leaves you with the weekends where suddenly, oh, I need a graphic. Oh shit, our designer has her days off, yeah. So you are forced to wait or still do it yourself and so on. And additionally to that, you then get into other challenges, like you have to consider the vacation days, the public holidays, You also have at some point to consider, I mean, right now, actually, I have to say, thanks to COVID, most IT employees are used to working at home and remotely, so we're not forced yet to rent an office specifically, which saves money. And additionally to that, most of the employees are already used and willing to just work on their own hardware, so we're also not forced to buy them MacBooks or laptops, which also is nice. But however, as mentioned, like it gets to the point where I then have to consider not only the monthly salary and taxes and whatnot, but also to, okay, when we hire them, okay, we have to suddenly pay whatever, like we need a new license for Google Workplaces, a new license for Jira, a new license for this and so on. So suddenly you have to consider their salary plus all those licenses, plus, okay, they need a laptop or they need this and that and so on. It's like really, it's interesting and frustrating at the same time. It's like the same when you first maybe learn about stocks and you YOLO your money into something and it goes horribly wrong, and then you either give up and you failed, or you understand that maybe you need a little bit more information, yeah, and you start learning some strategies. Could be something simple, could be already something like Elliott wave theory, doesn't really matter. And then you grow as you go. It's like even the same like what happened to me since I started those streams months ago, yeah. While I knew some of the basics of Elliott wave theory, and thanks to software like Wavebasis was able to piece things together with an acceptable accuracy for me personally, with those streams I was also often enough forced to admit I was wrong, and then forced to not just, okay, I was wrong, whatever, but okay, I was wrong, and then figure out how would it be right, yeah. And as a result, I constantly got better. And the same applies to everything else in life. So for example, if your parents or acquaintances or relatives didn't teach you about financial, or like the difference between liabilities and assets, for example, how important passive income is, yeah, how important financial freedom is in order to really have a life and not just live to work, yeah. Then it's also a journey. It's like, I mean, I went through the same journey from like, oh, I need a new iPhone, even if I have to buy it on debt in quotes, to understanding, okay, it's worth to make some sacrifices in quotes along the way. So maybe not get the new iPhone, but keep the older one, and instead invest that money and have it start working for you. And one of the most important lessons, or the most important things to learn, in my opinion, is like, don't get greedy, and have patience. Yeah, like one of the reasons why I blew most of my early trading accounts, doesn't matter if it was Forex or other things, was simply because while I invested €1,000 or $1 or 2,000 or maybe a little more, what I could back then afford to lose, but then you make 10% return and you see it's €100, well, that doesn't change my life. I'm not gonna like, what, 4 weeks for €100, screw you, all in, there we go, yeah. And as a result then, eventually, even if you get it right a lot of the times, well, one time you get it wrong and you bust your account. And yeah, like developing the patience that I have now, that I don't care if on our popular investors account they are only in quotes, now with moving the other funds like $5,000 or $6,000 total, yeah, and even a 10% return would only be before taxes $500 or $600 in a year, yeah. But I understand, I now have the patience to know that, well, this year it might be 500 or 600, but next year 10%, next year 10%, and plus depositing from time to time additional funds, it will get me there. So instead of trying to force things to happen, instead of trying to, okay, yeah, like going all in situations where there were not that many signs, yeah, like to be perfectly clear, develop the patience to understand achieving financial freedom in 5 years or maybe 10 years or worst case 15 years from now with, let's say, I don't know, like 90% probability is way better than trying to force it to happen within a month or two with a 0.001% probability, yeah. So, and yeah, like that's why I think like that's the difference also between most people and the small majority. That's also the reason why there is something like the top 1%. It's not that I mean, yes, some of them inherited their fortune and basically just, they already inherited the system that's working and making money for them. with such an amount of money that no matter how dumb or unqualified they are not able to blow it away. But in many other cases, it's simply the people that, like when you see some guy in a Bugatti or in a Lamborghini or so, it's very rarely that it is daddy's money or pure luck or so. It's very often that even if the guy is not super smart or the woman is not super smart, that they had the dedication, they developed the consistency, and they kept learning from their mistakes and improve over time to whatever they use to make that money, maximize that cash flow, make it work for them, and then suddenly they are able to afford the things that others are dreaming of. Yeah. And yeah, that's like an important part of the journey in quotes, like, or the difference between retiring earlier or semi-retiring. You know, if let's say currently you earn $2,000, or maybe you need $2,000 per month to live, yeah. Well, if you save enough that the interest that you make per year equals $12,000 per year after taxes, well then technically you could downgrade to a half-time job or part-time job, because you would make $1,000 from interest of your investments, yeah, or ideally you make more and only use parts of it, and your part-time job brings you the other, ideally 50%, and suddenly you already have way more freedom than the average person because you don't have to, yeah. Or simple things, even if we talk not about being rich, but like instead of buying a new PlayStation, a new TV, so it obviously always depends on where you are in life right now, yeah. But instead of buying a PlayStation, a new TV, a new iPhone, or maybe even skipping one vacation or something like that, or one night at the club, or put a little money aside so that eventually you have like 1 month, 2 months, 3 months, potentially up to 6 months of your expenses ready somewhere on an account that you can access at any time, so that if you start to hate your job, if your boss becomes an asshole, if you have new coworkers that ruin, like just I don't know, you wake up in the morning and you hate the idea that you have to go there and now deal with those idiots in quotes, yeah. Well, if you have like 2, 3, 4, 5, 6 months of your expenses, so the money that you need on your bank account available, you already have the freedom that most people don't have. You can quit at any time because you know you then have the financial security that you have 2, 3, 4, 6 months time to find a new job that actually is nicer. Yeah, and many people don't have that freedom. Many people, even if they hate their job, they don't have the option to, okay, I'm just gonna quit, because they actually need that next paycheck. Yeah, and in Austria, for example, I mean, it's been 10 years or so since I last saw statistics about it, but if I remember it right, like the average person in Austria has 25,000 euro debt, yeah? And then if you think about it, the elderly people or old people in Austria, most of them have a lot of money, like in quotes, a lot of money. Yeah, we're not talking about millions, but we're talking about like they have positive balances on their account and are debt free, because if they bought an apartment or a house, they already paid it off over 30 years, yeah. And then most of them, or many of them, they don't want a new iPhone, they don't want a 50-inch TV, they don't want to go on to the Maldives on vacation. So whatever pension or retirement fund payments they get, a lot of it just, many of them, not all of them, they're also old people that live like at the existential minimum or something like that, yeah. But many of them are able to put money aside. Now, if we consider that there are also like a lot of old people in quotes that have money, now what does that mean for the young people if the average person in Austria has 25,000 euro in debt? Yeah, so it just means that on average, younger people actually have more than 25,000 euro in debt. And yeah, like, and you can see that by when somebody, and I was the same idiot, so I'm not pointing fingers here and judging all young people are morons or so. I was in the same boat. I made the same, in my current opinion, mistakes, yeah. So in retrospect, I think that it was like one of the stupid decisions that makes the difference of like already being a millionaire or not. And So most of them, they get their driving license, or they turn 18, and although they don't have like a great income yet, they move out from their parents into their own apartment. Yeah. So suddenly they have to pay rent, they have to buy their own groceries instead of just maybe giving a little money to their parents and eating more than what they pay for. Yeah. They have to pay electricity, they need to pay their own insurances. They want to get a car, so obviously they lease a car instead of buying a cheap used one because, well, $200 per month or $300 per month to drive an Audi, why not? Yeah. And then often they forget that the car also needs gasoline, new tires from time to time, and maintenance and so on. Yeah. And voila, suddenly you have people that are forced to, they cannot afford to lose their job because while they might earn, let's say they earn €1,000 per month, which means in Austria, in most professions, they would get in July and in December twice that money. So it's kind of like vacation money, and it's called Christmas bonus, yeah, or Christmas money, actually, if we translate it literally. And so if people earn €1,000, many of them actually spend 1,200 per month. So it's kind of like they get their salary, they have €1,000, they spend 1,200. And next month they get 1,000, they spend 1,200, and they keep doing that because they know in July they get their bonus that brings them back into the plus or on break even. Yeah. However, if they lose their job, they get unemployment benefits, which is 70% of their last income. Like, I mean, there are some few rules to that and so on. Yeah. And they only get it for 6 months, which is also a rule there, which already means since and there is no summer and winter bonus there, so which already means they build a lifestyle that isn't affordable with just a regular salary and requires their bonuses to actually make sure that they don't spiral down in debt. And if they ever lose their job and have a month or 2 or 3 where they basically have only 70% of their money available, it actually screws their life up because suddenly they're not back at zero in summer and in winter, but they're actually €1,000 in debt, €2,000 in debt. Eventually, the debt on their bank account where they have to pay 10% interest or more becomes too much. So their bank employee, in the interest of the bank, obviously sells them on a loan. So suddenly and also tells them, why not also, I don't know, finance your vacation with it or get another car or something like that, yeah. And suddenly, while their bank account is at zero again, they might have a new job again and so on, but they have already a $10,000 loan just because they had to cover the balance on the bank account or the overdraft or whatever it's called, and whatever else they wanted to treat themselves with because they thought they deserve it. And then the whole journey starts again. They again start to spend more because as long as you have kind of like, as long as somebody saves your ass, you have no reason to change or learn from your mistakes. And suddenly the €10,000 loan has to be renewed and extended and whatnot. And suddenly people have like a €30,000 loan, but actually don't have anything to show for it because it was all just used to cover lifestyle. Yeah. And on the other hand, if people would be educated, so if people would learn about financial freedom, assets, liabilities, and so on, and then maybe live a year longer or 2 years or 3 years or 5 years longer at your parents' house, and obviously pay them something for the electricity you use, the food that you consume, and so on, yeah. But it's still probably cheaper than having your own apartment, and put some money aside, yeah. Maybe instead of leasing a car that adds to your monthly expenses, just buy a crappy old car that takes you from point A to point B. Might not be flashy, people might not envy you for it, but you will have those 200 or 300 per month, for some of it at least, yeah, available to again put aside. And then the difference is, like, if we consider if you start doing that at 18, well, when most people that again move out instantly, get their own apartment, buy furniture on credit and so on, yeah, lease a car, they will have to struggle likely till they die. And whoever is smart enough to stay with their parents a little longer, start putting money aside, yeah, settle for, yeah, like, don't buy things on debt in general. Yeah, the only thing to buy on debt would be property, real estate, and even that I would only buy on debt if I would plan to rent it out so that the rent of my tenants covers the loan, so that it's already a profitable endeavor. But yeah, don't buy things on debt. You sleep better. You don't have to worry as much if you lose your job or something like that. And the difference is, if I would have known that when I was 18 and also understood it properly, yeah, The difference then is like if you're still struggling and hustling and you have to do something when you're 30, 35, or yeah, probably 35 should be the limit, or if you already have like a decent net worth and yeah, like don't have to worry about how to pay the credit card bill and whatnot, yeah. But yeah, so that's some additional wisdom from me. Like, do with it as you please or what you will. It looks like we didn't reach precisely the level that I thought we would, based on if this would be a yes, stupid thing. So based this if this would be a perfect zigzag, but even that price point here seems sufficient to me. And we will see, maybe we move further down to actually get to the what we had, 220. So this here would be 221, or we turn around from here. Either way, I guess like that would be, in my opinion, a crucial point. So the 220 mark, because that seems like the perfect point for wave 1, 2 to then turn around. And if we go down further from here, so if we break through the 220 noticeably, so if it's like a little here, so, or because that's 221, so if it's like 220 or maybe 219 or so, nobody cares. But if it's noticeably, so if we go much further, then it would more point towards the idea that this wave C down here simply hasn't finished with wave 5 being at this point, but that this somehow is still part of the corrective move downwards, which, as pointed out earlier, technically the 61.8 retracement that we have from down here to here would be at 194. So technically there would still be a little room to go a little lower. But as said, we'll see that in a couple of candles. So I'm going to actually move that back again. So that was at roughly the 221 here. Let's add the Fibonacci retracement here again. Tap, tap, tap. Yep, so like this. So which means, yeah, that would be the perfect level for the Fibonacci retracement. That would be the 0.4 that we have here. And actually, based on the length of this, we were even a little lower. So it would, in a perfect zigzag, we would expect it to, I think it was 220 almost precisely, if I remember it right. But yeah, so. And then, yeah, even if today, by the way, even if today we still would see a drop to technically 190, or we see some boring sideways movements or whatnot, yeah. I mean, there are two options there, to be honest. So like if this wave C here for some reason hasn't finished yet, so again, technically it goes down a little bit more to 190 or 195, then it would mean that we're still in wave 2, which means that wave could also turn into a double or triple corrective pattern, which means then I mean, it still could, by the way, if this turns into a zigzag of some kind, which it also still could, because a zigzag also consists of an impulse or leading diagonal, followed by any corrective pattern, followed by an impulse or an ending diagonal, yeah. So if this turns into an ABC, the whole thing here could also still turn into a double or triple free corrective pattern, but it just means that we will have some sideways movements before we actually have our official orthodox 0.2 and then go up, yeah. In the other case, so if this still goes down further because wave C hasn't finished yet, so actually let's check here C. So for example, we see here that at 199 we would have the 261% 0.8 retracement, which seems like a possible option, yeah, like. But yeah, so no, not this one, no, yeah. And so technically, if this would still be or we're still to go down, it also would mean that wave 2 hasn't finished yet, because then this wave C hasn't finished yet, which also would mean there is still the option that, so we go down 200, 195, maybe 190, and then turn around, and again it could then develop either as 1, 2, 3, 4, 5 and in our wave 3 up, or it could still be wave 2 hasn't finished down here and we see some zigzag pattern to turn this entire thing into a double or triple corrective pattern, so with sideways movement until we finally finish and then go up. So, and yeah, but overall I would not get worried at all. So like I think, so in my opinion the labeling is still valid in quotes until 190. If we would fall below 190, then something seems a little bit off, and we would have to recheck. I would actually right now expect more that we, like have our 1, 2 and go up. However, as said, a zigzag would also consist of impulse or leading diagonal, followed by another corrective pattern, followed by another impulse or leading diagonal, which coincidentally 1, 2, 3, 4, 5 would also be impulse or leading diagonal, followed by a corrective pattern, not a triangle, followed by an impulse. Yeah, so which is again the point about like the flexibility of Elliott wave theory, and especially the problem or the challenge with labeling corrective patterns, because we already had one corrective pattern, and therefore technically, or we think that it finished here, or I think it finished here. So technically we could assume that this is the 1, 2, 3, 4, 5 that, sorry? So technically we could assume that this now is the 1, 2, 3, 4, 5 that takes us up, but for the first 3 waves, unless this next wave here is an ending diagonal, which cannot be a wave 3, so if we would have an ending diagonal develop here, then it would be clear that this is a zigzag and not 1, 2, 3, and it would be clear that this entire thing turns into a double or triple corrective pattern. And yeah, so. And then one also has to consider the scale of things, of course. So this is the ABC, the first corrective pattern that we labeled here. Again, technically could be unfinished and still go a little bit lower. So if this would be then ABC, it just doesn't match in size, yeah? And if we then consider that, so like, because obviously if that would be point C of the second zigzag, then in relation to this thing here, it just doesn't match up, which then means that this 1, 2, 3, 4, 5 corrective pattern 1, 2, 3, 4, 5 could then just be the beginning. So it could then be 1, 2, 3, 4, 5, and that could then become wave A of the zigzag that turns the entire thing into a double or triple free corrective pattern. However, what speaks against it is that in a zigzag, wave A would usually be a very strong move, yeah, and that just, well, those are a lot of green candles here on the small time frame, but wave A would actually be supposed to move faster. So while we could have this 1, 2, 3, 4, 5, it would be expected to be more like here. So where again, if we look closer, we are able to label this as 1, 2, 3, 4, 5. So not on the 15-minute time frame, but on the 5-minute time frame, we are roughly able to do that, 1, 2, 3, 4, 5. And so if this were the case, we would also expect it here that we already would be a little higher, yeah. So which makes it unlikely but not impossible, yeah. And here we go down further. We broke through now our point 4. So I just wanted to say we touched the 61.8 retracement. We touched the point 4, and we now broke through, and we are precisely at the point of 220. And now I'm curious to see if we turn around from here, or if we go further down. Like that would be, and again, let's try to get a trend line additionally on that thing. So, so the perfect point would have been, I'm gonna enable that stupid snap feature. Oh, it doesn't snap like this, yeah. So that would actually be the perfect point, 220.04. So we're still a little bit, or for a perfect zigzag in terms of price, yeah. And yeah. It's the moment of truth. Will we drop further and basically make it more likely that the corrective pattern downwards hasn't finished yet, or will we turn around from here and make this our next 1, 2, which still again could be part of a corrective pattern, but obviously it brings us into the right direction. So. Also, let's check around the 220 mark. If we zoom out hourly, 220, roughly here-ish. So it served as support here. And other than that, 220, okay, they were far away of 220. And yeah, then it served as resistance here, and also, yeah, resistance here, briefly as support here, and also as support here and roughly here. So, and that was, there we're already in, oh no, we're in February, so there's still room. And 220, yeah, we can also see that we had, that's too high, 220 is roughly this one. So we can also see that in January we also had it serve as support here and here before we then the next day gapped lower. So yeah, like not only Elliott wave theory would say it's likely that we bounce now up from here because we broke through the 220 resistance, or we actually already broke through earlier and we're dropping back to it or below it. And so we broke through again through the 220 resistance, and now it seems like likely, so Elliott wave theory would point towards we bounce up from here, and considering the past it would also support. If you want a more frequently updated chart, check Yahoo, just an idea. I don't think I can add Yahoo as a data source in Motive Wave. So that's one of the points here. And yeah, like, and I used to, before I discovered wave basis and then before I discovered Motive Wave, I actually used to just use TradingView. I like their interface. So I mean, I don't like it anymore. I mean, still in terms of UI, UX beats Motive Wave. But in terms of features for Elliott wave theory, it's just not equipped enough. Yeah, so like labeling different wave degrees or so, it's next to, sorry, next to impossible. But yeah, so I really like TradingView. I like the idea, although I stopped doing that, to publish ideas so that you label something. So basically already here, if I would have wanted to, and if there would be like, I now need to disable the snapping so that I get that down again to 220. So, or no, it was like 220.04, yeah, 220, like there. So basically already here or here-ish, where I said like potentially we will still go down here or here on the wave 4. So I could have pressed publish, share my idea and so on. And obviously it's then there for everyone to see. And then people would be like, oh my God, like if you get it right often enough, people would be like, oh my God, you become like a followed analyst and people follow your advice, yeah. And it polishes your ego, so. But yeah, like lacking the time to publish ideas, not wanting to label anymore in TradingView, but preferring Motive Wave and a couple of other reasons. But as an alternative, I still use I still like TradingView the most, yeah. So haven't used Yahoo Finance for charting or labeling. Didn't even know that they also, other than real-time prices, offer some kind of web-based chart. Maybe they don't, and I'm just misunderstanding your message. So, yeah. So, yeah, 6 p.m. my time here. I'm gonna take a short break, and then we're gonna, I don't know, like I'm gonna stay online another 20 minutes or so. So at most an hour, so at most till 7 p.m. my time, which would be another 50 minutes. And yeah, like again, we will see. So probably when I come back, either we broke below, or considering that small gap up here, it actually is now point C and we go up from here. Anyway, before I leave, I'm gonna make sure that the screen doesn't time out. Yep, so that stays here. And just for the sake of it, there are also so many nice icons. No, but there where are the other ones? Arrow marker, there we go. There we go. So just to make it clear where it should go, like providing assistance for the chart so it knows what to do in my absence. And yeah, see you in 5 minutes. So I'm gonna push some magic buttons and be right back. Well, that worked out as expected. As we can see, the chart followed my advice. So we basically reached a lower low here in an area where I'm not sure if we can say that this is yeah, like we retraced basically 90%. So tricky, stupid thing here. So I like my delayed chart here better. It's a little bit tricky because if this were to be in some, or let's actually see what the auto labeling first. Fix this. Okay, doesn't fix. Fix again. Did it fix now? Okay, so it would label it like this, which would check out. And now we have a lower 216, so 216 would be here-ish, which obviously would be too much, 76%. And the alternative would be if we get rid of that orange golden labeling here and yeah, stretch that a little, move that somewhere into, I don't know. The alternative would be, yeah, then it goes the way that it usually does to just get ridiculous. That just doesn't feel right. I mean, obviously, yeah. Elliott wave tools. Ending diagonal. That also won't check out. I'm not sure if it will show a warning for that, but that actually would not show a warning. But in an ending diagonal, basically, according to Elliott wave theory and our cheat sheet, basically every wave has to divide into a zigzag or a corrective pattern. So basically this here would have to be a corrective pattern. This here is more likely a corrective pattern. This here would have to subdivide into a corrective pattern, which the auto labeling has an issue with. Yeah, so it doesn't, or it would label it here, which won't check out. This here would have to be a corrective pattern. And then this here would also need to be a corrective pattern of some kind to make this an ending diagonal. And I just don't think that that's, yeah, thank you very much. Now I just jumped again back to, yeah. Just don't think that that is the case here. Now I said, technically, if we again look here and scale that properly and snap the waves, which it doesn't do properly, move them, snap, and also make sure that so technically the next point would be, I mean, we're still at the 50% line, so that's still okay, but the worst case scenario would be 194, so I'm gonna move that for now to our worst case scenario, 194. And if we look again closer now, yeah, like no idea, honestly no idea how to label that. The other option, and that would be an option that makes even less sense, would be if that would be 1, 2. God, why can it not snap proper? Yeah, whatever. So that here would be basically 1, 2, although also going to the 76% retrace or 78.6% retracement. And then this would be, so if that were to be an impulse, then that would be the base channel. Here we have our breakout from the base channel, which would be wave 3. We have, or we start our move towards the base channel back, which would be wave 4, which then in this case would actually be like this, and we can see it would pretty much touch or reach the bottom of that base channel in this case, so at 250, and then from there we would then have our wave 4, which would then be this point here with the point around 200, yeah, it was less, let's say 250, parallel through this point, and would give us our destination channel, which would then be, yeah, not at 194, but could also be in the medium of it, so could still be the 194, but the problem with that is if that were 1, 2, 3, 4, 5 down, it would only be the first part of the retracement. So since an impulse goes into the direction of the trend and counter trend moves are in free waves, and therefore that just wouldn't make sense either, and it would still leave us with the problem that if this then would be 1, 2, and that would be wave 3 of some kind, we still would need to be able to label this here as an impulse, as a 1, 2, 3, 4, 5, and yeah, like there's, yeah, like for that to be 1, 2, 3, 4, 5, we also would again need to at least see the $249, $250 mark here. And then that would also, like we don't have enough move upwards to have a 1, 2. So technically, if this were 1, 2, 3, it already cannot be the case because that here already would then be another 1, 2, and everything would be blown out of proportion. So in other words, again, the reminder, I suck at corrective patterns, and I think that the labeling that we have is still the most likely, so that actually this is already point C, and from here we are on the way up, and for some reason here we just retraced further than expected. So yeah, like by a few dollars, so $4 more retracement than expected. I don't like it, but I still think that this now, in this case now it would be like this, might be or is what we're looking at. And but I'm open for ideas. If somebody has an alternative labeling, I'm more than happy to look at it and to get additional or different perspectives of like how that thing could play out, yeah. A, B, C. Although then that would probably change and would be like this, A, B, C. Now I need the snap feature again. So A, oops. There you go. And then if we again take a line from here to here, yeah, like almost perfect in price while not in time if it's like this. And then here we would by definition need another A, B, C, which we have. That again needs to subdivide, although we don't have a, or do we have, I'm not sure if we have a 1 minute time, oh yeah, we have. Would need to subdivide into a 1, 2, 3, or 3, 4, 5. No, we need to go down here, so. Yeah, like it's gonna be next to impossible on that small time frame, so back we go to 5 minutes, and just don't like that we got that close to the low here, so at 211 or 200, yeah, 211, so. But still, it's the labeling I think is most likely the case, so have to wait another 1, 2, 3, 4, 5 candles to see which is which or how it is exactly. Tudum. Gonna check on Twitter if there's something I missed. Ah, yeah, I also forgot, like one thing mentioned at the GameStop shareholder meeting or in their report was that they got asked by the SEC to provide some documents. So apparently the SEC is looking into the trading of GameStop, but the question obviously is like, what are they looking for? Are they looking for collusion in terms of on the buyer's end, so people that buy GameStop, and or are they actually looking into naked shorts or whatever else? Yeah, so but they are looking for something. So hey Christian, my charting had us finishing wave 1 from that endless correction phase, and wave 2, which was between hi Pranay, great to have you here, by the way. Unfortunately, I can't link it right now because Wavebase decided to delete all my saved charts on its own this morning. Yeah, I had that happen to me as well. So my charting had us finishing wave 1 from that endless correction phase, and in this wave 2, which was between, wait, I'm gonna try to follow. Oops, wrong button. $245 and 2.5. Where do we have 2 here? Ah, okay, so wave 1. Ah, okay, so it had it finishing wave 1, which likely aligns with what we have, and then you was between 245 and 2.8 with a 78% at 180 or so. And wait, what? 180? 180, where do we have 180? I'm not sure I follow your first message. So the part with the, so like, and in this wave 2, which was between 245 and 205. So are you talking about this area here that we're currently in? So the drop currently down that you, in quotes, predicted 240 to 205. So this area to this area, or this area. That would roughly align with what we have, like where I say like, okay, that correction could technically go till 195, so based on Fibonacci retracements. Although I don't see a 78.6 retracement in this case, because if we look at from wave 1 till here, then 78.6 would be at 166, so would be that point of wave 2 here, yeah? Yeah. And no, I haven't found a way how you can recover your data. It's like the point is, when you open a new chart or something, I don't remember it 100%, but when you open a new chart or a new asset or something, it basically never stores your stuff. So it might work if you, I mean, it might not work now since it's already gone, but a workaround would be that every time you're done with your labeling, you copy the share link so that you can share it with yourself, yeah, of wave 2, but wave basis showed a 70.86 retracement at 181, but then likely your starting point is different. So because I don't have 78.6, no, like 78.6, yeah, would be at 166 here. So I don't know, like if your starting point is different, or if wave basis has you, let's see the no, like we would need to have a higher high to have 78.6 at that point, unless somehow your starting point is different. So I don't know if somehow, if you would start from here, no, it would be 190. So you would need to start from here in this case. Then it's 186, 181. So like, yeah, like if you would start from here, which obviously doesn't make sense since this is the end of the wave, so the bottom. I don't know, like, I mean, if we drop further here, then I think the 194 line, and then if we again use traditional or simple trading methods in quotes, yeah, like let's go to, now we're on daily, but if we look at 194, yeah, in that area, like here, it went sideways there, so it bounced off. Probably still have to look closer. Yeah. Let's add a guide here at 194.44. So we see here we didn't, or we bounced off briefly. We didn't even come close. Here, yeah, like we kind of like bounced off, went through, bounced off, eventually broke through, bounced off. Here, I mean, we gapped up, it went lower, but bounced off upwards, didn't penetrate, then broke through. So it seems like that's the next level. So first of all, precisely the Fibonacci retracement, and second of all, even if we look back in terms of support resistance, seems about right. Your starting point is at 136, which is here. Yeah, it's like the same thing, yeah. But if I start from here, then you can see that the 78.6 is at 166.5. Which seems a little weird, yeah, like it seems a little bit off, like maybe the difference is if you use logarithmic scales or not. So if we don't use, Yeah, there's your reasoning. So you said around 180. So if you don't look at the chart in a logarithmic time frame or logarithmic layout or whatever, then your 78.6 retracement would be at 180. Yeah. But when you have, since Elliott wave theory is about percentage moves more or less, so when you have huge movements, and I consider the difference, I mean, well, maybe on the lower time frame that we are at, it might be okay to look at it in arithmetic scale. So, but on the, so the bigger the movements that we have, so like if we, for example, look at from $2 to a couple $100, then we definitely have to use logarithmic scale to get the right picture. Whereas if we move closer, it's possible that because the movements are not that big, I mean, they're still big, but in a percentage way, that actually we could look at things in arithmetic scale, yeah? And then the levels that we end up with are different, which might seem a little weird considering that 50% retracements, so like 50% from 136.50 to 300 something, so 50% from here should always be 50%. But yeah, like there, I removed that guide, yeah. Like, I actually don't know why then the Fibonacci retracement also gives us a different area for a 50% retracement, because like, no matter how I look at it, if I look at it like this, or if we look at it like this, or like that, 50% between those 2 points should always be the same price or not, like. I'll read out. It's somewhere mentioned in the book, and or maybe it's, I think it was mentioned in the book, yeah, like that basically, yeah, like you have to, for each of the assets that you look at, you have to pick which fits. So it's either arithmetic fits better for labeling or logarithmic, yeah. And as far as I remember, I don't know where in the book exactly, but as far as I remember, the point is that because it's about percentage moves, so if we look at a stock that went from $10 to $500, the moves in percent or the moves in absolute dollars are bigger, or something like, it's explained in the book somewhere. But yeah, so that's why in general I look at GameStop in logarithmic, because we have a huge move if we look from last year till today. However, if we look closer, so technically when we look like this, where we have a move from 140 to a little bit more than double that, technically arithmetic scale could apply, yeah? And I mean, we see that the main 1, 2, 3, 4, 5 still checks out. Although using Kennedy channeling technique, if we are on arithmetic scale and we make our destination channel, then it looks like we have a throw over here. When we are on logarithmic scale, you also see how it distorts the channel because of how the price levels are adjusted. When we are on logarithmic scale, we nicely touch or barely break through the channel and bounce off, yeah. So seems like logarithmic is, at least I still think that here logarithmic view makes more sense. But the only thing that would change is that where currently my labeling would provide, or no, on that Fibonacci retracement would say the next level would be 194, your perspective would say 180. Yes, on wave basis, when you have your chart, then on the top right you have like the auto scaling, and there's also, so you might not see it, you might have to move your cursor there, but next to the price labels in the top right corner you have a few icons, and one of them says log, and when you press that it displays the chart logarithmic, and when you press it again, so if it's like enabled it's logarithmic, and otherwise it's arithmetic. And yeah, but back to the updated chart. So, and we keep dropping here, yeah, so again I missed a little bit here. And yeah, like looks like we are going to, which also means, by the way, so obviously, which means that this is not 1, 2, but logically, because we now crossed below the 211, but actually that we are, zoom out, so that this is still part of wave C on the way down. And yeah, which is a pity, but then again, next stop in my opinion would be the $61.8 mark, so that we have here. And which means again I bought a little bit too high, but yeah, doesn't matter, it's just a stop along the way. Would be nice. I really look forward to a time where I have more time to do the charting, and where it's not just about, okay, what are we looking at right now, but where I will then also hopefully have the time to already label different possibilities. So not just, okay, that's what we're looking at right now, that seems like to be the most likely scenario, but actively to already in advance label at least one alternative, and also then double check if all rules are followed, and double check how many guidelines are followed, and so on, to already in advance have like, okay, it's either that or that, but more likely this, and so on, instead of like the way we do it now. And but we'll have to, yeah, wait and see. Like, curious, like still cannot make sense of this movement down here. Like, I mean, this here is too small for, yeah, and even here in TradingView, I also currently had it in arithmetic, and now when we switch that, won't change much, but yeah, so even that retracement here is not even 30%, so, and honestly don't know how to label this as a 1, 2, 3, 4, 5 impulse properly. Like, I mean, if this is 1, 2, it would kind of like check out in terms of wave 2 small correction or simple correction, and wave 4 then, so 1, 2, 3, 4, wave 4 then more complicated corrective pattern. But then the question would be, wave 3 can never be the shortest. Oops. And if we take that to here, and we would have the next retracement area at 194, then wave 3 would be the shortest, so cannot be like this, so it cannot be 1, 2, 3, 4, 5. So the other option would be it's 1, 2, 3, 4, 5. But then if that's not already the end of wave C, then it would mean that this is 1, 2 with 3, 4, 5 still to come, which would point towards nowhere. So like, yeah, like really not sure how to confirm that whole wave C on the way down here. Unless that labeling here is still wrong, yeah, like that would be the last option. So basically, yeah, basically, oh, I didn't want to delete the wave. I wanted to give me my wave back. Yeah, so technically, what if that labeling is still wrong? What if for some reason, but how would we label that then? 1, 2, 3, 4, yeah. What if for some reason our orthodox point 1 is actually here? So this is some 1, 2, 3, 4 truncated fifth. And in this case then, that would be wave A, followed by wave B, and followed then by wave C. Although then, if it's a perfect zigzag, which it then cannot be, it would point towards 150 even, yeah, which Yeah, and it also doesn't look super nice, to be honest. That's on the hourly time frame. If we jump closer, so it would need then to be 1, 2, for example, 3, 4, although that would retrace likely into the area of wave. So that would need then to, as a result, it would need to be an ending diagonal, in which case all of those needs to be zigzags, and it just doesn't look like this, yeah? So it's like, no, I still think this here is more likely. A, B, and C still in progress, so. Cool, gotta actually do work now. Unfortunately, but always learn something new talking with you. I'm always glad if you take something away. I also appreciate it when you jump in and share some different opinion, or even if it's the same opinion, just on a different perspective. Because honestly, while I was aware about, you know, like the difference between logarithmic and arithmetic when it comes to Elliott wave theory, I've never considered the idea that actually when we look on the bigger time frame, logarithmic is in this case definitely correct because we have those huge movements. But theoretically, when we look closer, arithmetic could be correct because we have smaller differences. So we, yeah. But as we see, even and the difference between arithmetic or logarithmic here means the difference between $190, so $15 difference. So 195 is or 94 or 180, which is, well, not super significant, but it's still a noticeable difference. Yeah. And anyway, yeah, you can go back to work. Of course, I will also probably soon call the stream quits for today. I'll just have to figure out on YouTube how to actually end it. That's going to be the challenging part here, since, yeah, I'm going to go back here to that chart and going to try to check out if I can find my stream to end it. Probably I cannot. Oh, now it's showing up. That's cool. Yeah. So, yep, now it's showing up, and which means now I'm also able to end it, which means I can just enable auto stop. Yep. And cool. Yeah. And yeah, let's make this the last 10 minutes. Then it's 7 p.m. here, and I can get some other stuff still done today. And let's see if we, during those last two candles, have either another solid drop down to bring us to 194 or so, or we also need to sleep eventually, or if we turn around from here. But yeah, based on Fibonacci retracements and how that, or those that are surprisingly very often the areas where the price turns around, I would actually expect now that we drop further, and which is a pity, but yeah, it's like a temporary bump in the road. The funny thing, I mean, the really nice thing is, you know, if I would be hoping for a short squeeze, so I mean, if that would be my only argument or my only reason to buy GameStop, where I would be like, okay, it's gonna definitely squeeze, and but there would be no other argument, so there would be no positive signs from the company and so on, and I would not have Elliott wave theory and so on, then I would have probably already sold at some point in the past. But the nice thing is that there are enough people out there that look at GameStop and also look at it from a non-squeeze perspective, and most of them, if they, yeah, or many of them actually pointed it as like, okay, that's yeah, like gonna be 4 digits in a year or 2 years from now, even without a squeeze. So, and as said, like even if it would only reach $1,000, $1,200, maybe $2,000 in a year from now, without a squeeze, it's still an amazing return, so it's still a great investment. So honestly, even if there would be no squeeze, perfectly fine with me. And yeah, so again, back here where we have the updated candles and not the delayed ones. much fun so far. Let's look at 1 minute data so we have a little bit more candles to watch. And I don't have volume data edit here. Yeah, never mind. But actually, I mean, while we can label every move as like using Elliott wave theory, so we are able to map out how things might go or should go. And when we get it wrong, at least in retrospect, we are usually able to figure out, okay, what would have been the right labeling, yeah, if we would have seen the signs. But it still surprises me that how after a shareholder meeting that has so many good news in quotes, you can suddenly have like a 30% drop, or yeah, like 30, no, like, yeah, not 30%, like, where have we been? Again, back to 5 minutes, so we see a little bit more. So we've been at, technically we've been at 350 again, but if we just consider it from here, yeah, it's like still like losing $100 in value out of roughly $300, so like a 30% drop. Just surprises me, like how can that be? Like how can, I mean, you know, buy the rumor, sell the news, okay, so like, okay, everybody is expecting or people might be expecting the earnings to be better, so let's buy the rumor, which drives the price up, and then the earnings call happens, and then sell after that, yeah. But considering the tens of thousands of people that own fractions of shares and partially tens of thousands of shares and more that are just holding, it just, yeah, like surprises me. Like I would actually think with GameStop, you know, like, I mean, if we ignore technical or theoretical manipulation and whatnot, I would actually think with like so many shareholders or like retail investors that are holding their shares, and I know some might say that they hold but still sell here and there and try to buy the dip then again or whatnot, yeah. But with so many people that definitely are holding their shares, I would actually expect that all the waves that are corrective fall a little bit short, and all the waves that are in the trend direction are longer than expected, because it should mean less supply, yeah. But again, then we just have another piece of circumstantial evidence that points towards, well, possibly there are naked shorts and whatnot, yeah. So, sorry, yeah, didn't sleep too much last night, was reading longer. It's one of my, and not vices, but like when I go to bed, I usually read some fantasy book to kind of like get work out of my mind. And sometimes, especially if it's a good book or if I'm towards the end of the book, I'm like, even though I'm almost already falling asleep, it's like I just want to finish those last few pages. And then sometimes the next day I'm very sleepy. Yeah, it's like first world problems. But yeah, what can you do? And eventually, like with the main YouTube channel that I have, I also constantly like more and more receive like sponsorship stuff, like, you know, like we would like to have you mention this and that, and please let us know how much you charge for that. And I've been turning down all those things so far because I don't want to do that. But eventually I'm gonna be starting to reply to those people with ridiculous prices, and if somebody accepts it, then I'm either still going to decline and say I changed my mind, or I'm going to just do it because it's going to be a ridiculous price. But yeah, like it's always like a tough line to, or a thin line to walk between monetizing things more but still staying true to everything and not just for the money's sake mentioning projects that are, I don't know, that I'm not using myself, yeah, or that I'm like, I think like if I would find for my main YouTube channel sponsors that would be like, for example, if crypto.com would say they want to sponsor my videos in some way to get mentioned there, would have no problem to accept money from them, because it's really the wallet I'm using. I use their credit or their cashback cards and so on, yeah, and so it would be perfectly fine. It would be kind of like a win-win in my opinion, yeah. But like in the middle or in the beginning or anywhere in the video saying, by the way, today's video is sponsored by whatever crappy crypto platform.com, yeah, just to receive like, I don't know, $100, $1,000, maybe even more, just doesn't seem right. Yeah, it's like giving attention to platforms I have no clue about if they are really serious, how their customer service is, how their fees are, and so on. Yeah, but yeah. So anyway, like problem for a different day. So, yeah. My wife just got home from shopping, so I know I said we're gonna watch till 7, but I'm gonna cut this short 3 minutes early. I'm not sure yet actually if I will be able to stream on Monday, unfortunately, because our new project manager has his first day, which means we're gonna spend most of the day, maybe we finish until the market opens, but I'm not sure, to explain everything to him and onboard him into our company. In any case, to summarize, so as we can clearly see now, our original OK wave C is here, turned out wrong. The next level in my labeling would, as said, be 194. So we might still see the drop further down. Potentially, we might, or potentially that might play out today. And we might already see the recovery from that level as well today till the market closes. I mean, not a lot of recovery, but still some. Could also be that we slowly move down and by the end of the day just reach that area. Yeah, like hard to say. But it also means that on Monday, very likely, so assuming that this point C here would be correct, that no matter if we already reach it today or if we go slowly there, only by the end of the day, whatnot, but on Monday actually would expect upwards movement, obviously not till 300 or something, but then to see the development either of the 1, 2, 3, 4, 5 impulse or of another zigzag pattern that takes us a little bit higher to then be followed by another corrective pattern, but that's more a sideways movement to extend the duration of that corrective pattern. Yeah? Either way, my long-term prediction is still we go up. My long-term prediction is still that we go above $1,000 even without a squeeze. And but that's just my opinion, as it's mentioned clearly on the screen all the time, not financial advice. You do with that what you will. So as always, thank you all for tuning in. And with that, I'm going to wish you all a pleasant weekend. And if I manage to stream on Monday, make sure that you already have hit the subscribe button, enable that stupid bell icon, because as you by now know, I sometimes forget to schedule the stream, or I schedule them but don't make the scheduling public. Also happened in the past. But if you're subscribed and you have that bell icon in place, you get an email once I go live. And yeah, which is going to be especially useful because while I might not be able to stream as frequently as I would like right now, if or when we have a squeeze, I definitely will drop whatever I'm doing to come online. And if you are subscribed with the bell icon, you will get an email and not miss that. Yeah. So as said, like, it's been my pleasure, and see you guys hopefully on Monday, worst case next Friday though. Yeah. So till then, and bye-bye.